Petty cash fund. What is a petty cash fund? A petty cash fund is the amount of cash kept on hand to pay for minor expenditures. The petty cash fund involves the following three activities: establishing the fund, making payments from the fund, and replenishing the fund. Establishing the fund. In order to establish a petty cash fund, a check is written for the amount of the fund. This reallocates the cash for the establishment of the petty cash fund. A journal entry is then made to record the establishment. For example, a business establishes a petty cash fund for $100 on the 1st of January. This debits petty cash for $100 and credits cash for $100 to establish $100 of petty cash fund. Making payments from the fund. Payments can occur in two forms. Cash is taken from the fund to make a payment, or employees can seek reimbursement from the fund for payments made. After payments are made in any form, the collection of receipts and/or authorizations for the use of any cash are to be made. Payments made from the petty cash are not recorded in journal entries, as journal entries are recorded only when the fund is established and replenished. Replenishing the fund. As the cash in the fund decreases, the fund must be replenished. To do so, the remaining cash in the fund is counted and the business cashes a check for the amount that brings the total cash in the fund back to the original balance. For example, if the balance of the fund is $15 and the original balance was $100, the business will write a check for $85 to replenish the fund. This can be seen in the example. The receipts are used as documentation for the expenses. The receipts display $25 in postage, $47 in office supplies, and $13 in miscellaneous, successfully totaling $85 in which needed and requested to replenish the fund. In addition to this, a journal entry is made to record these expenses and replenish the petty cash fund, which can be seen below. Cash over and short. When a petty cash fund is replenished, the amount of cash needed for the replenishment should equal the total amount of receipts. However, this is not always the case. In such cases, the discrepancy is charged to an account called cash over short. Cash over short is a temporary account that can either have a debit or credit balance depending on the situation. For example, the discrepancy is added with the account cash over short expense in this example, with debiting cash over short expense for $2 accounting for the discrepancy. Thank you for listening to the Petty Cash Fund screencast.